Money FM 89.3, best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning, folks. Welcome to the U.S. Markets Wrap with me, Ryan Huang. And we've got new highs on Wall Street. The S&P 500 breaking new records, led by a move higher in NVIDIA as a partnership announcement with OpenAI fueled investor optimism about the future of artificial intelligence. The broad market index up 0.4% to 6,694. We've got the Nasdaq Composite jumping 0.7% and the Dow squeezing out a gain of 0.1%. So new highs on Wall Street. What is going on? Let's check in out Joseph Shaposhnik. He is the founder and CEO of Rainwater Equity. Joseph, thanks for joining us on the show. How are you doing?
I'm doing great. Great to be with you. Another record close in the U.S. stock market. And, it's optimism.
Joseph, help us make sense of it, because we hear how September seasonally is quite a poor month. I think historically it's down 0.7% every September on average. This time around, what's different? Because you've got tariffs hanging in the air. You've got so much to worry about. What is pushing up markets?
I think that it's a Goldilocks scenario that we're feeling here in the United States, where you have an economy that is growing just fast enough, but not too fast. You have employment that is somewhat soft, but not too soft. And you have a Fed which is beginning a cutting cycle. And historically, the data indicates that the stock market performs really well on a forward 12-month basis with that as a backdrop. So the historical performance of September apparently will not be repeated, though, of course, there's a handful of days to go. But it's kind of an exceptional time. And what we're seeing is that the tariff concern, as I think we talked about the last time we spoke, is really receding into the background. It's kind of baked into the cake at this point.
Yeah, baked into the cake. We also have some corporate news, especially on the tech front. That seems to be a crowd favorite still when it comes to investing. How are you changing or approaching markets right now?
Well, we've maintained our technology investments on the cloud side, the AI side. We continue to maintain them. We haven't meaningfully trimmed them. But what we are adding to is defense. And we see a supercycle in the defense side of the market, because today, as we look at NATO members in Europe, they will be increasing their defense spending from $400 billion per year in annual spend to $1.4 trillion in annual spend. And that's a pretty large increase in spending, and really indicates in our mind a defense supercycle. So we've positioned to be prepared for that, and we've added to our aftermarket aerospace parts investments and our defense-oriented investments, because we think that will be a very strong cycle.
All right, so if you've got defense in your basket, if you've got tech as well, what about small caps? That seems to be breaking new highs as well, as we look at the Russell 2000, posting its first record high in nearly 4 years.
Yeah, small caps are very sensitive to rates. So not surprisingly, when rates go down or are perceived to go down, that end market performs particularly well. I think the end market also is performing particularly well because people are feeling reasonably good about the direction or the impact of tariffs. So we own some small caps. They are in Europe, in the Middle East, and a couple in the United States. Nothing specific in terms of a small cap theme, but we are finding good ideas in small cap for sure.
All right, so we've got a couple of things to look out for. How about when you think about diversifying into some of the more defensive plays right now? Gold comes to mind. You talk about a Goldilocks scenario. That is, I suppose, something that has helped gold to some extent. It is outperforming equities, actually.
Finally, it's been a decade-long trend of underperformance, but that isn't where we're seeking diversification today or a hedge today. Where we are seeking it is in businesses that have not really been in favor. And so defense is one end market. Healthcare is another end market, which has been out of favor for a long period of time. But we do see some green shoots. And so we like cash flowing businesses. We like recurring revenue businesses. That's the theme of our investment strategy, only investing in recurring revenue businesses. So gold is not particularly recurring and does not have a great track record over a long-term period of time. And in a declining interest rate, a moderate inflation backdrop, the case for it, I think, is maybe not as strong as it was maybe a couple of years ago.
All right, so you've got that in the backdrop as gold continues to push on. We do have some data points coming through this week. The big one seems to be the PCE, or Price Consumption Expenditures Index. What are you looking out for on that front as the Fed talks about looking at jobs more closely?
I think that the backdrop in general is a moderate inflationary environment. That seems to be the appropriate outlook. On the job front, the jobs data seems to bounce around somewhat meaningfully in the United States. But again, I think that we've got enough cross currents of both positive and negative to keep both the jobs and the inflation figures roughly in the range that they're in today, which is an unusual range where it's not particularly hot and not particularly cold, right in the middle.
Okay, so that's playing out for that front. How about energy security, especially when you talk about geopolitics, helping to lift defense? Is that also something that might help lift energy prices?
It seems as though energy policy on a global basis is to be more long energy than to be short. So it's, from my perspective, tougher to make the case that energy is an end market to get very bullish on.
All right, so energy perhaps still one to watch out for. And we are heading into the next round of earnings season. Going by what you've seen in the past round, what are you expecting in terms of performance? Because we've talked about how the consumer in the US is still quite resilient. We do see some change in spending patterns. What are you taking away from the retail side of things?
The retail side of the ledger in the United States seems to have become weaker over the last 90 days. So rolling into earnings season, the real-time data indicates that the consumer is moderating, but growth in technology spending continues to be very, very robust. So from our perspective, that means more of the same. Technology should have a good quarter. The consumer-sensitive businesses like restaurants, consumer discretionary, that's going to, in our view, that's going to be more hit or miss based on everything that we see today.
Yeah, talking about quarterly numbers to come, we did have this proposal by Donald Trump talking about how he's pushing for an end to quarterly reporting in favor of just twice a year. What do you make of that? Is that going to be beneficial for markets?
That's a great question. I see both sides of it. On the one hand, I had a front row seat to watching how much time and money is invested in preparing for earnings by management teams every single 90-day period of time. It's enormous. On the other hand, the United States and other markets that have quarterly reporting generally have the best performing markets and generally have great transparency associated with them. My hope is that we settle in the middle someplace where the transparency continues to be very strong, but the burden is lessened to some extent on companies. But when the president seems to want something, he's generally been getting in the United States. So I think we should all be prepared for that as a possibility. But companies will not be mandated to only report twice a year. They will now have the option, if this goes through, to report twice a year. So I think what you'll see is a lot of companies continuing to report on a quarterly basis because they're accustomed to it and their investors will want it. And there will be some companies that pull back and go to twice a year.
Yeah, to your point about Trump getting what he wants, the SEC is looking to propose a rule change following his comments. And also, I think to your point, we might actually see that hybrid of sorts model playing out where companies will have the option so they can decide whether to be upfront or to be how transparent in terms of how they want to approach the markets. I suppose that's good news for foreign investors who actually want that type of transparency. I think that's something you could look forward to. Let's talk about what else is playing out in the markets, and that's where we've got rates going down. How is that going to play out for fixed income when you try and balance the portfolio?
Well, we're equities only, so our portfolio is somewhat concentrated in 25 or so global equities, both small, medium, and large. And as I said, we only invest in recurring revenue businesses because we think that they're the most resilient businesses that we can find. But on the fixed income side, fixed income has been a poor investment now for a number of years. And I think that will continue to be the case on a relative basis relative to high quality equities. The index, I think, particularly in the United States, will have a very difficult time continuing to generate mid-teens rates of appreciation. We're coming on our third year here of better than 10% total appreciation in the S&P 500. Much better than 10%. But I think there are a lot of pockets in the U.S. stock market that haven't experienced such robust growth, and I think they will outperform fixed income over the next couple of years.
All right, a great snapshot of where markets are heading towards with Joseph Shaposhnik. He is the founder and CEO of Rainwater Equity. Joseph, thank you so much for time and insights. Always great chatting with you.
Great to be with you.
All right, we'll catch you again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.